Hello, welcome to this week's Forex Outlook here at xm.com. My name is Rafi Boyajian, currency analyst, and here with me is our chief economist, Michalis Forengiadis. So, Michalis, it's been we saw some strange moves this week. The dollar did manage to recover from its post-Fed meeting lows. Initially, it was driven higher by rising treasury yields. Then we saw some risk-off later in the week. Government bond yields globally actually fell back, and the dollar though remained in demand on safe haven flows, and we saw quite strong weakness in other majors, particularly the euro and the commodity-linked currencies, the Australian, New Zealand, and the Canadian dollars. So please tell us in more detail what happened this week.
Yes, I think it was fairly interesting, as you said, Rafi, that the dollar did hold its own despite the kind of dovish talk by the Fed. It seems that there are few alternatives to the US dollar right now in terms of a currency that does have significantly positive interest rates, and its economy is growing. So we did get quite negative economic news. There are quite a few worries in terms of what is happening in the Eurozone. We did have the European Commission slash its economic growth forecasts, so that hurt the euro. On the other hand, another major currency, the British pound, although there were few news on Brexit, substantial news, or news of substance, it does seem that the longer it takes to formulate a strategy that is going to overcome the obstacles and lead to a deal, maybe the more worried the market is going to get. And as you said very correctly, the commodity currencies, we had the loonie getting hurt a little bit by the drop in oil prices. We had the Aussie getting hurt by a little bit of somewhat dovish talk by the RBA governor, although the RBA itself was not as dovish. The RBA governor, the day following the RBA meeting, did express that it was as likely to have, it was getting more balance in the sense that we could have a rate cut or a rate hike, and the market right now is more pricing in more rate cut rather than a rate hike. And we also have worries about the kiwi and perhaps the RBNZ. You are going to talk about that, I assume, in a moment. We did have bad New Zealand employment numbers. So all in all, I think that the picture from the global economy is not so good. And adding to those woes, we had President Trump more or less saying that he will not meet Chinese president before the end of the deadline that has been set for March. So that's a little bit of bad news, because the market was hoping that maybe a meeting between the leaders would help to overcome the obstacles towards a deal on trade, even a short-term deal. I think this is more or less the background. And what can you say about next week? What should we be on the lookout for?
Well, the kiwi is going to be probably in danger next week still. The RBNZ will hold their policy meeting following the RBA's one of the past week. They're expected to take even more dovish bias. Of course, we know that the RBNZ, in fact, all the way back in August 2018, adopted a somewhat dovish bias, opening the door for a possible rate cut. They said the rate cut is as likely as a rate increase, and possibly at the next week's meeting, they almost certainly will hold on to that bias, but they might even potentially forecast a rate cut at some point this year. They will also be publishing updated economic forecasts, and we're also going to have some important GDP numbers coming up next week out of Japan for the fourth quarter, as well as the UK. The Eurozone will publish revised GDP figures, and Germany will publish its GDP estimate as well for the fourth quarter. We're also going to see some Eurozone industrial output numbers, and if we see more negative numbers out of the Eurozone, we could see the euro falling even further, potentially testing the 1.13 level against the US dollar. We've got another important event next week is going to be trade talks between US and China. You mentioned President Trump signaling that there's likely to be a meeting with President Xi. But on a positive note, the high-level talks there's going to be another round of high-level talks in the coming week. So if we do see some progress there, perhaps we could see another bounce back in risk appetite. And coincidentally, China will also be publishing its latest trade numbers as well. So if we do see another big drop in Chinese exports, that could potentially upset market sentiment. After the US, it's going to be somewhat quieter. The focus will be on US inflation numbers.
So I think it's important also to note that China is going to come back from its New Year holidays. So I think that is also, I think that's going to be more activity during the Asian hours. Okay, a few Asian markets also opened over the last day or two following that New Year break. So we are getting back in order, and it should be busier, especially the Asian hours. Thank you very much, Rafi, for your input. Thank you everyone for watching, and have a great day.